And welcome everyone. Welcome to the Decoders channel. Tonight we have a special event because it's gonna be a special stream, and because we're gonna talk about like the startup mindset specifically in Web 2 and Web 3. And to do that, Anton from Sharky is here because, bro, like, thank you so much for this tweet. Like, you make a tweet about like all of the like what it means basically to be a Web3 and / startup founders, and that's exactly the purpose of this channel. So, man, I can't wait to do this episode with you. It's gonna be nice.
Yeah, thank you, and thank you for having me. Hi, everyone.
Hi, everyone. Hi, Hoshi. Hi, Steph. Hi, MQ. Oh, let me give you the chat so you can interact with people too. No, give you that. Forgot to do it. And here, boom. Now you should be able to see people. Cool. Okay, so yes, for everyone who wants some context about it, you can click on the pin tweet, the pin message, and you will see Anton tweet that describing everything. But yeah, because like Anton, like you built a previous company before that, right? Like before Sharky, like you have a huge experience in Web2 businesses, right?
Yeah, built 2 companies and worked as in a probably 5 early stage startup, not as a founder, but like as an employee. So yeah, all of those were 2 companies.
Yeah, and like you and obviously like Sharky, which is like a huge success in on the Solana ecosystem, and more chains soon, right? Yeah, how is it important, like for people, for you, for your perspective, to understand first like what it means to be a founder in Web3, and even like to understand like the skills required and like the whole mindset of like founders in Web3?
Yeah, I think when you start in, it's kind of like similar. It feels similar. You're just trying to get things off the ground, find product market fit, maybe find funding if you need funding, or just find revenue streams or whatever the way to survive to experiment. Up to the point when people start using your platform or your product, after that it starts slowly feeling differently. Like I'm mostly describing the journey of like if you first type Web3 founder, what to be prepared for. So like when people start using your product, it's still very dense community, like at least on Solana. I've heard that Ethereum, for example, is a little bit more disjoint because it's bigger. But on Solana, this network graph is very dense. It's like, imagine you're running your startup, like, I don't know, for like a private school or something. If something is great, everybody will talk about this and people will know about it kind of like within a week. If it's not great, then people will also know about this within a week. So expect when you know, like often it's advised, like when you're building a product and finding product market fit, to find this like 2 handfuls of users who like your product, like early adopters who used your product despite like difficulties, despite like it being in beta. They just like, it solves their problem. They're really passionate about this and they're very forgiving. So like build this audience, get their feedback, and after that kind of like start growing and scaling. If you're struggling to find 5 to 10 users that use your product daily or at least weekly, then you don't have product market fit kind of. But in crypto, there's like 5 to 10 users, like likely they will also like talk to each other on Twitter, invite friends, tweet about this, and kind of like it will start expanding. So you need to get ready that your community will start growing without you trying to grow community. And then you'll have to manage that community, you know, answer community questions like your roadmap, features, whatever questions they have. So that community management, I guess my point is like community management doesn't start as planned often. It starts because your product is growing and usage is growing. And then when you get to that point, community management is not something that you can just hire a community manager, a couple of more.
Yeah.
Several. My advice would be to establish somebody who is like a communications lead in some sense.
Yeah.
So they help communicate with community, manage community team itself, hire.
Yeah. Yeah, that's the whole like building in public narrative, right? Yeah.
Yeah, in the Western, I would say it's if you're building a protocol, and there are ways to use some sort of tokens there, whether it's NFTs or like fungible tokens, that's a whole different world that is open for you. Not for raising funds in case of NFTs or whatnot. It's a world it's a growth mechanism. So it's a world to bring more people. It's a new tool kind of like to do that and to retain people. So like economics that is structured properly will retain people. Ideally, it also will bring new people, but that is a very challenging problem to structure economics that is not Ponzi, but also welcoming for new users and is strong enough to retain existing ones. That is a hard problem, but it's all there, kind of like that economy, like this Lego blocks to create this economy, it's there. So yeah, so I would say those are like key differences.
And did you solve it, that dichotomy and this problem with Sharky, you think?
No, I don't think so. I think we more focus on retention than new users, kind of like bringing new users. Like we solve bringing users with NFT sales, but not with NFT presence. So right now, I think people use the platform because they want to. So there's enough incentive to use the platform as is. But in my opinion, there's not enough incentive for people to want to buy more NFTs as they start using. Like some subset of users do it kind of like, okay, I believe in the future. There's small benefits if I get in on it now. I wish I got in kind of 9 months ago, but let me still do it because I believe in the future. But I don't think I have incentives to like ape in like right now that strong. But I also haven't seen super strong incentives built like that.
That makes sense.
Anywhere.
And like you mentioned like multiple times, like the product market fit. So like it's basically like we mention it like in this podcast like all the time because that's what we talk about in business and stuff. But like like what is it and how do you when do you reach product market fit? What it means to find product market fit for a company?
Yeah, I think there are two ways to see it. One, if you're planning to build a company that generates revenue, and that's not always the case, when people are willing to pay for a product, in crypto, it's always like when people use your product in a way that, let's say if you're taking fees from transactions, if people use your product in a way that creates those fees, and they not just tried your product, they keep coming back. So there is some sort of retention. That is the first sign of product market fit. People try a product, people come back and do more things with that product. And second, when they organically talk to each other or to somebody. So like they like your product enough to talk to friends without you like, without you like creating a referral program, for example. Like if your product is really good, they will talk to somebody, they will talk to their friends, do similar things, especially in crypto, because crypto is all about communities. It's very rare when somebody's like, I'm using this product in isolation, don't talk to anyone. Likely they have like some alpha groups, Twitter groups, Discords, just Twitter in general. So they really like it. They will mention it somewhere. In other sign of product market fit that is kind of like in parallel, because not all products are built to transact in Web3. Not all products are protocols. It's just usage. Like if your usage is growing, maybe you build in infrastructure, maybe you build in a tool. You see your volume is growing from diverse sources, not from like one whale. And that growth kind of like accelerates and continues. That is another sign of that. It may not be a product that generates revenue yet, but you're onboarding customers, you're onboarding people who do something. So in one way or another, it's still people use your product. I do like products that generate revenue more because it's a stronger signal. But it's definitely possible to build like some viral social products and then monetize it in some fashion.
A lot of businesses and slash less in Web3, but like when it's time to pay for a service and no one wants to convert to a paying customers, you have some problems there. Sometimes it's like it'd be tricky. But that's part of the growth too, right? And that's like startup equal growth, like thanks program. But like do you also apply like this growth paradigm on Web3 when like it's a super niche down communities and industry? Or like of course we have to achieve growth, but like do we reach the floor of the growth model in Web3 faster than Web2, you think?
Floor of the growth, like you mean like the ceiling?
Yeah, no, exactly. Yeah, no, yeah. Sorry. Yeah, like the ceiling of the growth is like reach faster because there is like 50 people trading NFTs on Solana, for example.
Yeah, there's like 8 developers on Solana.
Yeah, exactly.
50 people trading NFTs. So, yeah, definitely. It's a denser graph. There's still smaller user base. So as of right now, yeah, you definitely reach some kind of like market saturation quickly. I think Sharky reached like the point when we felt like, okay, our growth will naturally slow down because it's just not that many people. So probably in like 7 months.
That's crazy.
Yeah. As space grows, as we invite more and more users here, that will change, of course. But the graph density will still be higher than in Web2, just because how community are built here. And it's good and bad. So like it's mostly good though. For startups and for growth, it's easier to grow. It's easier to have growth strategies that have incentives with like tokens or some other incentives. Like it's just easier. Web2 is too large. So if you build a consumer product in Web2,
it's crazy. I don't do that.
It's challenging. Yeah, there's a lot of creative strategies. You can always, I know, like I worked in one of the companies when we did like education for kids, but it's online service. I wasn't one of the founders, but one of the founders when she was trying to grow the company. It's very inspiring story. She drew to schools before parents drop off kids and kind of like manually advertised, like so give like flyers and talk to parents, kind of like, hey, your kids might want to learn this like thing that we teach online, like check it out. So like to build this like 10 users initially. That's how they were validating the market, just like literally like in person advertisement as a founder. So there is always a way, but it's just harder there.
Yeah. I mean, like, and like right now, like it's to grow like a Web2 company and like consumer product, like it's capital incentive, like, it's capital incentive, like crazy. Like you have to raise million to reach like million of user and like, grow fast because then your VC asks you for that kind of exponential curve, right? Like it's madness. And we don't really see that in Web3. I mean, I don't know. I'm not sure. I don't know.
Web3 is like, I think, is less focus on advertisement, on like kind of like traditional attracting users through traditional means, because it's still a very niche community.
Yeah.
They're still very highly engaged early stage users,
Yes.
or just like advertisement is not their thing, at least for crypto projects.
When
So
you see
Web3
an
is
ad,
mostly
it's a scam.
yeah, it's mostly growth strategist, economics, influencer. So incentives to make money, incentives to, like, my friends are using this, or this person I trust is using it, kind of.
Yeah, I got like 1,000 API on Sharky because I take loans, blah blah blah, and then I talk to my Telegram group because I want them to GMI, right?
Yep.
No, 100%. And okay. So the other point after the growth, also like if you're not first, is that like in Web3? If you're not first, did you lost? Do you think like, or there is room for like the middle pack, like not the top? Like if you're not in the top, it's kind of okay, but like there is can have a huge no man's land in the middle, right? Like of project, NFT project and stuff in Web3 that you don't really see in Web2 because you have like a shit ton of startups that don't do anything, but you can be in the middle of the pack, but like still making millions of revenue with an NFT project. If you're not in the top 10, top 20, top 30, you don't really exist, right? Like, do you see that too, or is that possible to survive even if you're not in the top 10 project?
It's possible to survive. I don't think like your position is an NFT project. Like it depends. Like if you have a product that's aside from just your NFTs, which you probably should unless you build a community. But then your product defines kind of like your placement. Like I think space is definitely small, so I think there's room to be second place. For some areas, there's room to be third, but not much more aside from that. I think some competition is good in some areas, some is not. There are some slices of this pie that are just too small. Like even our like NFT space on Solana like shrank very drastically, so it became very small for how many competitors we have. So we're now kind of like reslicing this like small pie, hoping for it like to again expand as it was before. So it depends, but it creates risk. So like space is volatile. You know, like 1 month everybody is like showing records, and suddenly next month like everybody left, so liquidated, sold. It's very easy to snowball for those effects.
Yeah.
Like when everything is hype, everything is hype. Everything is down, everything is down. Like it's more down, so it's more volatile. Product depends on transaction volume, kind of like how much people transact. I would be worried about predictability of that revenue stream. Like with Sharky, we've seen it over and over that it's very hard to predict like what will happen in 3 months. Especially if you take revenue in Solana. So then you depend on Solana price and also people's activity and usage. So it becomes challenging to kind of like plan your financials, run your startup if you rely on revenue. And at some point, like it depends. If you keep scaling very quickly, then you can keep raising funds and kind of like maybe you'll reach some kind of like dream profitability in the far future. But in the current state, not a lot of protocols in this space make enough profits that also stable enough to be reliant on that stream. Sometimes during bull run, some protocols, made millions per month. So now they kind of like set for life. But again, you shouldn't plan for that. You should plan somewhat pessimistically.
And you can wait the bull run forever and bankrupt your company 2 or 3 times before that shit came back. Like, so do you step up everything with like do you like sell your soul on the fly or DCA, or do you have a strategy, or like how do you manage this soul money that you got?
For treasury, we just sell it daily. We don't we don't mess with pricing and kind of like trading. We just assume we go with the market. Like
that makes sense.
Approximately every day we just like convert, denominate to USDC. But yeah, the only time we waited is when Sol hit 8, because I think we were just like, okay, there's no way it's not gonna bounce from that. So we waited for a couple of weeks.
Yeah, it's no pressure, right? Yeah. That was a bad week.
It was a good week to buy.
True. Did you?
Some of my friends got pretty big bags. Like I bought a little bit because already I was overexposed to Solana.
Yeah. That makes sense. And okay, so your other point was like, the revenue model. That you basically like talk a little bit about it. So like how is that important for like this companies in Web3, like to should they chase like revenue as soon as possible, or like raise money and then like go with the market? Like what would be the best strategy if you would like to create a project right now in terms of revenue?
It depends. It depends if it's transaction based or is it subscription based, or is it one-off, like somebody paying for product to get access to something. Revenue is always the strongest validator. Like, you can build a social platform with some obfuscated even to yourself Ponzinomics.
Yeah.
Like I've heard those fences. Sometimes people design economies, they don't immediately realize like why it works, and it works for wrong reasons because it's like obfuscated Ponzi. And you can see this like, oh, things are growing, people are using my platform, and then as soon as that bubble collapses, like usage goes away and people leave. So make sure you kind of like your usage is real, and one of the realest validators for that is like people pay money, like in one way or another. So in your company is kind of like, again, pay money not in the sense that like they pay money and receive more money in some sense, then that's again some sort of Ponzinomics. Like you can definitely create environment when whales profit of retail and everybody else in your platform, which is how space works currently in general. People with more knowledge, more experience, more funds. But this is how like world works, I guess. Like capitalism and all of that.
Exactly. Like Web3 is just like a unregulated space where like everything that we are doing is just happening in the real world, but like behind closed door. And for us, it's a bit more like transparent in a way, because we know it works and we can see it and we can see the transaction and stuff. But still happens.
So in that sense, it's a good validation, but people often confuse like validating through revenue versus like generating enough revenue to sustain business. Because it's crypto, everything is innovative. Like you build in business, but it's really, really hard to build business within a year, I would say, that generates enough revenue for your team to sustain life and to scale. It's like literally like handful companies in Solana, for example, and maybe like 2 handfuls on Ethereum that have that, I think. So if you're building for the future, you need time for that future to arrive, to help us create that future. It doesn't mean you cannot validate your business through revenue. You can ask customers to collect those payments, so you can start taking transaction fees. If people do that, you can always like, okay, let's now ignore this or turn this down if it prevents our growth, basically. The question for you always, as a founder, would taking fees and making revenue slow down your growth? And the answer almost always yes. It's just economics. If I'm using platform and it costs me X, I would use it more if it costs me less than anything, like X plus anything. Just it could be insignificant, but it will always result in like less usage and less growth, like versus like free things. But you can validate idea through that. If it works and now you want to scale, just like now remove all the fees, continue growing. So that I think is consideration number one. It's like just deciding like what do you use it for. Do you need to raise funds? That also depends on kind of like your motivation as a founder, why you're building this company. Do you want it to be like company that is aiming to hit like really large growth numbers? So do you plan to build something like more small, sustainable for maybe yourself, your founders, your team? It's always probably easier to deal with everything if you haven't raised funds. So if it's an option in this space for you, that is a very good path to learn a lot of things and maybe build sustainable business. It's also challenging.
Yeah, because the barrier entry is small. It's low. Like the barrier to entry it's kind of small, which is good because there, as you say, you can experiment a lot. I would like to touch like one more point, like with the team culture, before we end the podcast, because we only have like 30 minutes. I don't want to talk too much of your time because you're busy building, right? Yeah. But like, the team culture, like for me, it's like, but probably like the most important point that gonna make or break your business, right? Like it's really important like to have all of your core team members to be aligned in the same mindset and like kind of like the same mission of it, like behind the project. And like, do you see a fundamental difference between Web 2 and Web 3, or even like Web 3 and the corporate mindset, and like the people who work in a big corporate job and Web 3 actors? I think that play a role.
Yeah, there is a pretty big difference. Startups and larger companies is generally a big difference. Like I worked with several people who came from like larger company background, they were working startups. It's very prominent that the mentality is different. Mostly it's like speed of doing things.
Yeah.
In startups matters more than anything. In large companies, like processes matter more, doing things correctly matters. Startups do things quickly, learn from it. In Web3, I would say, as I consult more and more companies, general feeling is that founders are younger and less experienced. Not necessarily bad, but it's if you're founding a company, your expectation should be that you will likely find less experienced founders, maybe first-time founders, maybe just like younger audience. So it will be like less mature views on things, but also more drive, more energy. So there's like pros and cons as in with everything. Differently, I would say Web3 mindset is not split like traditional startups when you work with either startup people or non-startup people. Kind of like, drastic division is like that. Here, it's much more you work with like crypto native people versus like somebody who is not that. And I would say a lot of crypto native, to me, it's more of a negative than positive. Because when I work with, I've been in DeFi for like last 8 years and like early Bitcoin, everything and stuff like that. So some people, not all of them, they are just too into bubble. Like they don't necessarily have this mindset of like building consumer facing products. They have mindset of like building something that they used to, which is very niche. It's very like closed up, kind of like, only people in the world understand what they want to do, kind of thing. So there's plenty of this. And a lot of founders here are engineers, so they're builders that haven't yet built products that people used before. So there's a huge difference in building something cool and building something useful. So this space is very saturated with, like, as we call it, builders that just build shit, which is good. There's a lot of experiments, but not a lot of people can or want to know how to build something people use or want to use. and especially not just like DeFi people or people, NFT people, crypto people, like just people.
Yeah.
So that is a challenge and intersection, like finding like founders like that more on this side. And I would go as far as to say, like, just if you can find a founder that just have track record, doesn't matter if it's Web3 or not, or engineer that has track record that built in the frontiers kind of like products people use.
Yeah.
Maybe even product person, like product manager from Web2, that is really good. I don't think getting crypto is such a huge undertaking for decently, I don't know, intelligent person. Like when we came to this space like 2 years ago, we had this kind of like attitude, kind of like, oh, you guys like not crypto natives. There's like only one person that you knows anything. And I felt insecure for a couple of months. I was like, yeah, I guess, you know. But it's not a rocket science yet. It's much harder, I would say, to go to other areas than crypto. Like, you know, going and building AI startup without anything in that space would be much more difficult. There's just a lot of domain knowledge that takes time to learn. Crypto, you can pick things up within like 2 to 3 months easily.
Yeah, I mean, like, the friction is massive. Like, you have to understand, like, what the fuck is a wallet. Like, you have to understand, like, cold wallet, hot wallet, security, blah blah blah. Honestly, I'm happy I'm a software engineer too, so I can understand like a general understanding of crypto and tech stuff. Because, like, I couldn't imagine like going into crypto without that software engineer background stuff. Because it's tricky. It can be tricky pretty quickly.
Yep.
No. But yeah, man, like, I mean, we already talked for 30 minutes. That's so sad, man. That's going too fast. But yeah, like, I know, like, after you tweet, like, did you had like any founders coming to you or people coming to you asking in your DM like for advice and stuff? Like, how did this experiment went?
Yeah, it's going fine. I'm still talking to them. I think within first week I got maybe more than 10 requests, but I think I picked like 4 founders to support.
That's cool. That's cool. Like, man, like, if we can like make more episodes like that, because again, like, this whole understanding of like startup ecosystem / investors, and like, because from my perspective, I feel Web3, like, if you understand it as like, or if you see it as a business angel for project, you kind of low-key increase your success rate into like avoiding rugs first, and like have some like big bet that can play 1,000 times. So that's the mindset I have. That's what the mindset I want to share, and that's why we are doing this show today. And that's why I fall in love with your tweet, man.
Thank you.
But thank you so much, Anton. And everyone in the chat, like, don't hesitate to watch again this episode, because thanks for the views, but also like to understand everything that we said about like whole startup and stuff. And just if you have any question, DM Anton at Restuta, and like, I mean, you know him, everyone follow him anyway. So like, if you don't follow Anton yet, you have his Twitter profile in the description. Man, thank you so much again, and talk soon, and we can make another episode in the next couple of weeks.
Thank you for having me.
Thank you so much. Have a good day. Bye, everyone.